Is your home loan assumable? Well, AHG Nation asks, and we are here to answer. A lot of people have been on the fence with today's interest rates. They've been just waiting on the sidelines. So we're going to go over what an assumable loan is that might get you moving.
All right. So sellers, if you have a VA or an FHA or a USDA loan, your home is actually assumable.
Yes.
And you can actually advertise your current interest rate, which is probably lower than today's rate, about 7, and you can actually market that to buyers out there in the MLS.
Absolutely. When a buyer assumes the loan, they're going to be able to take over your interest rate, and you will get the equity that's in your home, which is that gap between what you owe on your loan and what today's market value is of your home, through their down payment. And you will be completely free and clear of the loan, and you will also not have any responsibility with the home. It's not like a seller carry or some of the other products that are out there.
Yeah. So what this does is give sellers with assumable mortgages a competitive advantage right now in today's market. If you're able to offer this assumable loan out to the buyers, you've got potentially speeding up the sale process and maximizing your profits.
Absolutely. Yeah, for buyers that are going to assume the loan, they're going to get that lower interest rate. So this is going to give them more purchasing power, lower closing costs, and let them afford a higher priced home than they would in today's current rates.
Yeah, it's really a win-win.
It
right?
is.
You know, so why isn't everybody utilizing this option? Well, there's a few factors in play. The complexity of the process, it's a longer closing time. Usually, instead of 30 days, it's more like 45 or more. And the buyer has to have a significant amount of down payment. See, because again, that seller is entitled to the equity, and that buyer has to come up with that equity.
Right. So there's some numbers that need to be ran through to make sure that this makes sense. But for homes that have 20% or less equity, it's perfect, because if they can assume your loan, 20% is the standard down payment.
Yeah.
For homes that have more equity, it just depends on the buyer and if they're going to be able to have that higher down payment. And some buyers do. So it'll open more options for those buyers. But there are many homes that have 20% or less equity that this can be a viable option for the seller and the buyer.
Yeah, and that's less cash that the buyer has to come up with the payment. They can put towards the down payment. So there's ways where this can be, again, a win-win for everybody.
Yes.
So right now, when we're dealing with high interest rates and high sales prices on homes, what we're dealing with right now, mortgage assumptions really present a great opportunity for buyers and sellers to make their home a little more affordable.
Yes, and we have partnered with a company that will actually help facilitate this entire process, because it can be complicated. But right now, I have a listing currently on the market that has a 4.25% interest rate. They have exactly about 18% equity, so no one would have to make more than a 20% down payment, and they would be able to get a 4.25% interest rate, which is kind of unheard of. It's
almost half of what things are right now. I mean, right now, 7.25%.
Right.
So 4.25% would be fantastic.
Right. And when you think about that with what today's rates are, a lot of people are in rates that are 3% or even less. So that, when you think about what they are today, that can have a buyer affording almost double. It's a 50% savings of what they can afford or save on their mortgage payment based on the price of the house.
Yeah.
So if you have any questions about this process, please feel free to reach out. Or if you'd like to know about my listing that has a 4.25% interest rate, just reach out. We are here to answer those questions and help you through it.
Yeah, and if you have been thinking about selling and you have one of these types of mortgages, an FHA, a VA, or USDA, you know, this might be the unique opportunity you've been waiting for.
Absolutely. Thanks for joining us once again. And be sure to like, subscribe, and follow Arizona Home Group on YouTube for more videos like this. Bye.
You guys have a great June. We'll see you next month.